TGIF Warriors. How's everyone doing? Alexander, how are you? Hugo, Sinatra. Everyone doing okay? There were a couple of important developments yesterday. So let's take a look. Hi, Jays. Hope everyone had a decent week. Hi, Alexander. All right. First of all, stock indexes. I just want to show you guys this. So here's your daily. We came right off the wedge line, and the megaphone line in NASDAQ right here. Okay, and S&P went almost to this horizontal important support level, and it's bouncing as well. So I would say that under last night's lows, that's when this happened. Same with NASDAQ, that there's problems because, we may end up with a reversal day, but we had a reversal month that finished yesterday, actually an outside month. Paulie showed it. And same thing in S&Ps, even though we're bouncing, look at the weekly, that's NAS. I'll get to the metals in a minute. And it's still an ugly week, isn't it? We took out last week's highs Sunday night and took out last week's lows too. Monthly reversal in euro to the downside, huh? It may just be a down candle, because reversals usually happen, monthly reversals don't happen mid-range or anything, or near lows. They happen near like after market's been going up for a long time, usually at tops and bottoms rather than midstream, Brock. But you're talking about an ugly month in euro. Let's take a look and look at what this is holding. Unless we're back over 1750, I still think we're headed to 113. So this is what Brock is talking about. Oh gosh, I have so many fibs up here. I have to clean up this chart. So he's basically talking about it down. We took out last month's highs, last month's lows, and we finished near the low of the month. So is that what you're talking about, Brock? I have time to answer questions. I think the biggest event was yesterday. Now, you guys know I was looking for a third drive, and this could have qualified. Didn't get to my line, but doesn't mean it wasn't a third drive. Here was we didn't quite get up to this line, all right, but we did take out the high, so the form is correct. I mean, doesn't have to get to the lines, but this was important. And why it was important is because of what the metals did. Remember I said I would not even consider long precious metals until I had a yen high. Well, the yen high may be in. A lot of time frames did not confirm. The 2 hour was pretty classic. It still ends up being an up week, so you can't rule out another attempt at the highs. But this is important, because if this is really on its way down, and I saw where it could complete, I think it's even Grega. What the heck? It's just Stel and me today, right, buddy?
Yep, we might get Steve later on if he's all
right. So
doesn't.
Yeah. So this would have prepared you for a move to 112. I'm pretty sure that Grega still had this up there. And you guys know we have the promo going. So, this is really such a huge advantage to have this. So where's the yen? Okay, here we are. So I saw this. Let's see if this is a 4-hour. Okay. Minimum 3-wave drop for him. But if you look at 112.06, actually I think was his number from, you know, way down here when we're starting to do I think it was the longer term one that showed it to the daily. Maybe it's a monthly. Yeah, this is it. Look at this count. So, you know, if we fail from up here, this is an important high. It's talking about, you know, all the way back down to here. All right, so what does that mean? That means yields will come down, right? And if yields come down, you know, the metals can go. I'm not sure the dollar has peaked, but it's important, you know, that the end, what the end did. You know, it takes some of the restricted upside from gold and silver out of there. Below 94, 93. Okay. So we have a very experienced crowd here. So that's pretty important what happened there. So yes, and we'll just show it. Look, here's the week in yen. It was an up week. Here's the week in yields. Yields trying to hold the 148 level. Now this doesn't look as bad right now as the yen does. In fact, you know, we still have a confirmed high up here. So if yields are going to hold this 148 level, we could get another run. And if that happens, we'll get a bounce in the yen and we'll get a pullback in gold. Yeah. Okay, I'll remember that yesterday was the last day of October. I think those are the main features for me. I don't think you could get real bearish about the dollar, and I know it looks heavy, but right now it could just be some type of ABC. I think we need to close back under 93.50 to call the dollar rally dead. We could still go to Stel's
96.
Yep. Yeah, the rally started at 89. Yeah, I think in January was actually 89.70. So I still think it's an up week in the dollar as it is. But it's a better candle than yen. See how much it didn't leave as much of a wick, at least not yet. Okay, so when you think the dollar peaked, this may be, you know, a great short. This could peak before the dollar peaks. So keep an eye on the yen, even if you don't trade it. I think it was a short, and I'll be looking for rallies next week to short it. So the day after everyone declared the metals dead with DSI at 10 and 12 and silver, silver turned. What do you think, Stel? Was that it?
They've been declared dead many times in the past centuries.
Yes, like Lazarus. So
yeah, I don't know if this was a bottom in silver. It will depend on the Fed and the dollar and all that. But man, if we get any lower, then I think it's going to be an even bigger gift. I have been slowly accumulating. I still have less than half the position I want to have because I want to be. I'm always a little bit more prudent. Sometimes I miss you know, I missed having full size on the trade I want when it goes well, but it doesn't matter. Yeah, let's see. I mean, as I said, it's going to be about the Fed, and you know, when do they start tapering? They said they're going to start tapering late this year. We have the next meeting early November, and then we have October, and really, it's down to the payrolls numbers now. I think because inflation, we can all agree, is there.
So yeah, that's next Friday, right?
Correct. Yes.
Okay, so look how they took these lows out in silver, and now we're unchanged on the week. And similar situation, although the gold probably held 61.8 back of this big candle that we had that week.
It's like you said so many times, and Blake has said it, don't put your stops very close to where you think the level is, because every time they're going to push it, and they push it a little bit more. So you saw what happened with silver. You know, we took out the lows. I'm sure a lot of people capitulated, and now we're back above, and let's see where it goes.
Yeah, that's we could get 1,700
in gold.
Week to take those stops.
I've been talking about 1680, 16. Yeah, it could well happen.
All right, because that's where the big stops are. So we'll see. Just to hunt stops. We'll see if they can get to them. And you're right, Ronan. We will need a resumption of this move in the dollar, and I hope you're right about one more shot up to 113, because the line comes in here 12.5 about, and this line's not perfect. Look, it's not even touching it. So to me, a lot of lines are just guidelines. You know, I'm always surprised when they work. And there's October 4th is a turn window. Okay, a turn which way? Back down in equities maybe, or if we're declining into October 4th, maybe a low. But look at this, Stel. This is pretty important. You know, went right to the wedge line and bounced, and you know, everyone's looking at this horizontal support in the S&Ps, and it almost got there last night before it bounced. But I think that last night's lows are really important. We could get quite a correction going back under these lows. Right.
Yep.
Right under these lows, right under these lows. I don't think it'll have a problem getting to the 200-day moving average. Might try and hold it. I actually think it's going to take it out if that happens. And Stel and I are here. Stel, if you want to comment on anything I've said, if I'm off base, that's fine. And then we could take your questions too.
Let me take the screen for a sec.
Go ahead.
Steve's here. Damn it.
Oh shoot, we almost had
anyway, I have a few things to say, then he can I think you're right about the dollar, and you know, I've been looking at the dollar index for a while, and on this daily chart, you know, we've been talking about this 94.47, which is the 38.2, and 96.10, which is the 50% retracement. And we seem to be reacting off the 38.2, but clearly, you know, this could be just a small correction. Tomorrow, next week's payrolls number is going to be important, as always, probably more important than usual, because, like we said before, inflation is a given that it's high. Now it's all about employment. That's really the last excuse that the Fed has, so you know, we will see if they remain on their hawkish path and they say, yes, we're going to be tapering, and yes, we're going to be hiking second half of next year, which I think is very, very quickly. I mean, sorry, not hiking. They will be completing the taper by the end of the first half next year, which I think is very, very quick. I mean, this is, you know, this is going to be, they said they're going to be doing it slowly, but, you know, to go from full buying to zero from what they're buying right now every month in 6 months, I mean, that's you know, pretty fast for my you know, in my view. But anyway, let's see. Couple of things to mention. We did, surprise avoid a government shutdown yesterday because they managed to secure funding. We've been saying that, you know, this is all a bit of theatrics. Now the attention turns to the debt ceiling, and there, you know, I'm reading you know, Bloomberg and everywhere, they're going, oh, it's a standoff and it's going to be very tricky negotiations. Come on. I mean, it's we have, Yellen has told us we have around, 16, 17 days to go, and they will increase the debt limit. And actually, who was it? Was it Yellen who said it? Somebody said, I think it was Yellen, said
Yellen.
that Yellen, I am not against removing the ceiling altogether.
Oh,
And
who would
making
have
this-
guessed?
Yeah, there you go. Rather than doing this every 6, 12 months, whenever it is, just get rid of it, and everything just can continue as normal.
To be honest, I totally agree with her, despite being a fiscal hawk, simply because the way they view the debt ceiling, it doesn't matter if it's there. You know what I mean?
Yeah, exactly. They just keep moving the goalposts.
Yeah, they'll just keep moving it in perpetuity.
Yeah.
It's more than obvious that they don't really understand what's the point of not letting your debt explode higher. So it's, in my opinion, it's a given that they will start caring when it's going to be too late. So until then, it removes one stupid drama from our everyday lives, having to go through this every few months. You know what I mean? So yeah, they might as well remove it.
Yeah. By the way, I loved your tweet, Dale. That was funny. The other thing which we got today was Eurozone CPI, up from 3% year on year last time, up to 3.4%. And clearly, it's still rising. We've been talking about this for a while. And even core inflation, without the volatile items, food, energy, and all that, I think that was up to 1.9%. So even that measure is now at their target. So they, I'm sure the, Lagarde and her gang are getting a little bit sweaty now. But inflation is here. And this inflation rate is a 13-year high, which is impressive. And we have to say that. We are getting core PCE today from the US. And some other data, but really it's about next week's payroll numbers that we really need to be focusing on. What else? Markets-wise, it's interesting because we're seeing a bounce in equities now in the last hour or so. And
yes, it is a change of. It is definitely a change of theme from the previous days, Stelio, where we had a pre-market sell-off in vast majority of the cases. So let's see if this also signals, some change of behavior having to do with equities. Definitely, the dollar is showing.
Helping.
Yeah, exactly. It's showing in. It's pointing in the same direction since it's clearly selling off. Cryptocurrencies seem to be exploding higher, so they don't.
Yes. Any ideas why? I haven't seen any news or anything.
No, I haven't seen anything specific as well, but they're free to move higher if equities don't keep on selling off today. And there is.
No, it's a scarcity.
Yeah, we've scarcity. Yes.
Yeah.
We now have more than 10,000 cryptocurrencies, but they're very scarce. Don't worry about it.
Well, you need energy to create them, right? And that's not infinite.
That's the only given thing.
Anyway,
So let's see. I mean, if equities do bottom out in the pre-market today, then I see no reason why we won't go back to what we had, pre this corrective move, meaning dollar moving lower, the rest of the risk correlated assets moving higher, so on and so forth. But it's too early on the day. So in my opinion, today is going to prove to be an important day. Also, don't forget that today is the 1st of October, right? So it's the first day of a new month. So any end of month flows are now over, and it's very frequent to see markets topping out, bottoming out,
and reversing.
Exactly. And reversing either at the very, very last days of the month or the very, very first days of the month. So it's last day of the week, first day of the month. I'm paying very, very close attention to what's going to happen by the end of the day. I think it might be very important.
Yes, agreed. And when it comes to equities, I think for me, we're about 100 points, or not 100, it's just like 40 to 50-ish in the S&P. If we break that, which was a high, then a low, I think then we might be going quite a bit lower. But until then, this for me is still kind of a correction in the in the longer term. If you look at the longer term, I mean, look at this.
The move lower has been very orderly so far.
Yes.
It has persisted a little bit longer than they usually do, but it's very orderly. We haven't seen any type of panic selling whatsoever, right? And as Anthony is writing, I forgot to mention it. It's also the first day of the new quarter, so it's not only the first day of the month, but it's also the first day of the new quarter. So, yeah, in my opinion, a very, very important day, technically speaking. So you know, I'm going to be writing the end of week analysis, and I think it's going to be interesting to see what's going to happen today. As you mentioned earlier, Stelio, we had said many times that the area between 94.50 and 95 is an important area for the DXY as well. So far, we're seeing a rejection, at least an initial rejection from there.
Yep.
Now, to be very frank, I was monitoring. Let me take the screen.
Yep.
To be very frank, I was monitoring this triangle here, the one in green. So, you know, getting rejected from 38.2 is one thing, but you know, the next question is, okay, when do you know that this rejection is valid, meaning that it's not anything more than just a temporary setback on, you know, on the way higher for the dollar?
Back under 350, you'll know.
In my opinion, yeah, we dropped below 93.50 again.
Yeah.
And the chances that this is a, you know, valid rejection increase substantially. So as I said, I think we're going to have some interesting day to day, perhaps, you know, first days of the week, next week as well. And that's going to help us determine what's happening here. Have we bottomed out in equities? Have we topped in the dollar? Or we have more to go? Yeah, we'll soon find out, Dale. We'll soon find out.
Okay, well, in case you didn't want to wait.
Any hint about the lottery numbers?
Yes, I have them right here.
Okay, if you can Skype them to me.
All right, you got it, man.
Right. So Stelio, we have some data also coming at the bottom of the hour, right?
Yes,
personal
we have
income,
core
consumption.
PCE is the important one. In about is that in about? Hold on,
7 minutes.
7 minutes. Yeah. Canadian GDP as well. And then in about an hour and a half, we have ISM, manufacturing PMI. But the core PCE number is important because we know the Fed looks at that. And,
yeah, a little bit. Yeah, the Fed looks at whatever looks better having to do with inflation. Yeah, and if at some point they need to look at something else to appease them that, you know, there is no inflation problem, they're going to be doing that. Don't worry about it.
Yeah. Even I was reading today, even Neil Kashkari, is he the Minnesota Fed chairman? Anyway, he's the Uber dove of them all, and he said, "I'm very comfortable starting the taper now," but he did say that he thinks that raising rates should be in probably better to be done in you know, later than the others.
Yeah,
but still,
in the year 3022.
Even doves, though, you know, Uber doves, they're on board with the idea of tapering. So I think we can assume that it's happening. And now the question is,
I think it's definitely happening.
The question is what pace and what reaction of the market. That's the thing.
What pace? A, B, will they manage to go through with it completely? C, even if all that happens, are we ever going to see another rate hike in this cycle? You know, I especially having to do with the last one, consider me a skeptic about it.
Hey, Steve, I bet you'll know the answer to it. Why are people so worried and concerned about the size of the reverse repos of the last several months?
Let me put it very simply. What the Fed is doing is, at one hand, buying treasuries because they need to do QE, which in essence removes this asset from the market, and then they need to put it back. So
Okay, and then they have to sop it up.
So
'Cause the
basically,
reverse,
then
right?
they take the excess reserves from the banks and give them collateral, give them basically
yes,
the-
so
the-
it's really funny. In essence, the reverse repo phenomenon, if I want to make it very, very simple, is one more example of what we've said many, many times, having having to do with the response of governments and monetary authorities like central banks, that they do A because of reason X, right?
Yeah.
But then that A creates a new problem, let's call it Y, and then they need to do B, to fight the new problem that they just created, so on and so forth. And this is a chain, you know what I mean? Because every action that goes against the normal market function creates side effects. And
Well,
then usually they want to fight the side effects.
Well, I notice the bears are hanging on to this phenomena as I don't know what. Are they thinking it's a prelude to tightening that they're doing, or this is tightening what they're doing by the, not letting all this
reverse repo, you mean?
Yeah, they used to call them match sales, which was to drain reserves. But
yes.
why are the bears hanging on to this, that this is going to lead to a financial market problem? Do you know?
Tightening in general is the way things have gone over the past years. Tightening is bearish for stocks, right? Because
So
they've been
they're
rallying.
just saying, okay.
But the point though is that this is tightening, but this is, remember, they're taking the excess reserves of the banks. This is money basically that they have. They can't lend it out. They can't do anything. So they can either keep it or they can, give it to the Fed and basically earn, a basis point or two or whatever it is. So, or 10, whatever it is. So this is tightening, but remember the nature of what of these reserves. These are just excess reserves sitting on the balance sheet. It's very different to have a big straight repo spike. This is very different because this means that banks need liquidity.
That is a big red signal. A big red signal.
Okay, that's what the bears are hanging on to. That it's a problem.
But yes, bears, because reverse repo is technically tightening. And any tightening theoretically is not good for stocks. So bears will use that. Yeah.
Okay. Got it. Thank you, guys. So good to work with intellectuals.
With Steve, you mean? Yeah.
That was including you.
Yeah.
Anyway,
okay.
Mostly stages, actually.
So we have a minute and a bit to go. Anything else we want to mention?
Yeah, we have we have a few things to talk about, technically speaking, that I think are important today, other than what we mentioned. I mean, the rejection of the dollar. Looking at several of the currency pairs separately, some of them are at interesting junctures. Here is the Aussie now testing this resistance area. Here is the cable back testing the broken triangles, trend line support as resistance. So, I have many charts on my screen that stress out the, importance of what happens from here. Here's the USD knock, and that's why I held into it. Look at this beautiful rejection from this expanding triangles, trend line resistance. We're forming today a very formidable evening star formation. And, at the same time, what was the first asset class that actually produced the reaction? It was gold, silver, with yesterday's bullish price action, which didn't seem at the time to be, to be fitting, what was happening in the rest of the markets. Now, of course,
the yen coming off helped.
Yes, yes, absolutely. The yen got rejected from the previous high, roughly
Took out the stops first.
1.5 year high. No. We actually didn't make it above it. We came extremely close.
What high are you looking at?
Okay, give me a second. US consumption 0.8 versus 0.6. US core PCE 0.3 versus 0.2 expected.
Yeah.
US personal income, though lower, 0.1 versus 0.3. And Canadian GDP at minus 0.1 month on month versus
Minus 0.2, yeah.
That was forecasted, but on the other hand, the previous number was revised lower from 0.7 to 0.6. So basically, consumption a little bit higher, personal income a little bit lower, inflation a little bit higher, Canadian GDP marginally higher than expected. That's what we got.
Cool.
Wow, you could have been a financial reporter.
Oh yeah, absolutely.
On Bloomberg. I could see you on Bloomberg giving this
definitely.
stuff. Yeah.
With my beautiful Greek accent, yes.
You know, someone was mistaken, and you know they were commenting. Oh, I like when you and that Russian guy go at it.
No, Russian. To be honest,
Russian.
Russian accent is very different. To be honest,
yeah.
For those that know, it is very different.
Yeah. Anyway, just want to let you know that
it is also rough, but in a very different way.
They have a lot in there. So no guests today.
Okay.
You want to just open it up for Steve? You haven't fielded. Well, you field questions for subscribers.
Let me go back to the USD yen, since that's what we were talking about. The USD yen, that was the high I was referring to, Dale. If you notice, that was the high we found in February of 2020. So it's like 1.5 years ago, right?
Oh, okay.
So we got rejected from that exact high. I mean, I think we came short like a couple of pips. So for the time being, also an interesting rejection, although, and I'm going to go back to what I wanted to say about the dollar also, although it is, it is very likely that this is going to be a temporary setback. As long as we trade above the broken channel trendline resistance, there is a good chance that this is just a corrective pullback, a temporary rejection from that high, and we might see higher prices. How is that going to happen? Simply, if the 10-year yield, which is, the most obvious catalyst here, if the 10-year yield is just also having
just going sideways.
Yeah, a corrective consolidation or a slight pullback. I mean, worst case towards 138, and then it continues higher, then you should expect the USD yen to continue its way higher. So
nice looks.
Yeah, equities, the 10-year yield, these are mainly in my focus, and these are mostly going to determine what happens in the rest of the markets. And I already stressed twice the importance of the following days, today and a couple of days from the next week. In my opinion, if we see a return back to the previous theme, people should not try to fade it, because it's very, very likely that it's going to be a real move. And my medium to long term bias hasn't changed anyhow. I do believe that until or unless the wheels go off the bus, which at some point is inescapably going to happen, the theme is going to continue being a rather weak dollar and a slow grind higher in equities, right? Because this is exactly what both monetary and fiscal policy is attempting to do. And unless there is, some kind of a big storm ahead, they'll be rather successful in continuing this for, who knows
how long. Wheels haven't come off, but the air pressure is low in the tires, I think.
We've been here before, and
I know.
Yeah, You know.
Oh, I've lived it.
Yeah.
Yeah, but you know, it still was a failing
It's like
rally.
the Groundhog Day, right?
Yeah, yeah. So if this is a temporary pullback in the yen and the dollar, and they're both going to go again, and higher yields happen again, I just don't see that as being, you know, jet fuel for equities.
Listen, if the move higher in yields is slow and orderly, I don't think that the market is going to care for a period of time, right? Now, I'm not saying indefinitely. That's definitely not the case. I mean, if we keep grinding higher in yields, at some point the market is going to start caring. But in my opinion, we're not there yet. I don't think the market is worried about yields being below 2%, for example, the 10-year yield being below 2%.
Why don't we also look for this, Steve? Because I would, you know, before the dollar rallied to new recovery highs, and I thought we were going to top in that 93.5 level prior to the breakout. To me, the most important test was if we did have another wave down in the dollar, it didn't have to be a collapse, just, you know, 200-300 points. Was it going to support equity prices or mainly support commodity prices? So, you know, if we do get this dollar weakness, which we still have, and we're getting a little fade in the S&Ps and NASDAQ right now, if we do get, you know, dollar weakness and it doesn't help the S&P and NASDAQ, that'd be another red flag to me.
No, I agree with you. I agree with you. I agree with you.
I think it, you know, I think the gold was the right signal yesterday. So
yes, I agree. It was an important signal yesterday, both in gold and silver. Although, you know, I have to stress out here that in order for some kind of a confirmed move higher in gold and silver to begin, I want to see silver back above this descending channel. Trend line resistance passes from 2365 at the moment. And in the case of gold, I want to see it above 1800, which is now the confluence of the 200 daily moving average, this descending channel trend line resistance, horizontal support resistance area as well, and the psychological level, because it's a nice rounded number, the 1800. So yeah, until that happens, you know, we have to consider that we're still in some kind of a corrective move lower. Now I'm very, very sure that the move lower in gold and silver are corrective, and anybody that has a doubt about that, the only thing they need to do is zoom out in the chart and realize the characteristics of the move higher in the last gold move, and the characteristics of this move lower, which you know, is getting close to taking, you know, equal amount of time. But look at, we've just retraced a fraction of that move, right?
Yeah. So the bears are saying that it was like A down from the all-time high. Like, go back to your last chart. Yeah. The first break from over 2100, and then the rally back to 1980 is B. And now we're going to have a C.
Might be the case.
From 1900.
Or we might have just a more complex correction, like a zigzag or whatever. It doesn't really matter. What matters is that even the untrained eye can see the difference in momentum between the two moves. And I think that's all you need to know. So I still have zero doubts, completely forgetting the fundamentals, which are extremely bullish precious metals. But even if I had absolutely no understanding or no idea about fundamentals, or I didn't want to take them into account whatsoever, and I just technically had to look at this chart, not even knowing what kind of an instrument I'm looking at. For me, there would be no question where the trend is.
Okay. I'm just saying what the bear case was. That would
okay.
1400 or 1500.
Is it impossible? No, just because nothing is impossible, right? Do I think it's likely? I think it's very, very unlikely. I think it's very unlikely. But in any case, I'm sure that this is a corrective move just by what I'm noticing here. And sooner rather than later, you can expect another explosive move higher in precious metals. I do believe we're going to be seeing again silver at $50, and the next time it's at $50, it's not going to be a third rejection. Third time is going to be the charm, if you ask me.
Do you like SILJ? Yeah, are you in that ETF, the junior silver miners?
I am in that. Small.
Okay. Did that have a good day? Because I think I saw it had a wedge. Yeah.
Yeah, it did
This-
have a good day, but it
Yeah.
had a very bad day on the day the silver
Right.
smashed.
So
yeah.
this is the GDX.
Yeah.
You'll notice the exact same thing. We had this impulsive move higher,
Right,
and so
right.
far we're unfolding some kind of a corrective move lower. So I do think that we're getting closer to finding a low. Perhaps the 61.8 will do the job. And SIL.
Welsh, I think, said 25 last of his stuff. You know, that,
Okay,
that
might
guy
be
on
the
Trader
case.
Summit.
And SIL,
You
here
guys
it
should go
is.
watch Jim's interviews on Trader Summit.
Yes, they should.
Yeah.
We, in general, we have very, very good interviews on Trader Summit. Very good interviews. You should really check it out. Tradersummit.net. And having to do with SIL.
Yes, U.S. cannabis is safe.
Having to do with SIL, a little overthrow from this descending channel, currently testing the 50% fib. I wouldn't be surprised if this is a false move lower. So I'm keeping a close eye on it. Now, having to do with GDXJ and SILJ, as you understand, they're both like high
Juniors.
beta. Yeah,
Yeah.
they're like high beta trades of the same thing, right?
Right.
They're like the same thing, but a little bit more speculative.
Yeah.
So there is no chance that one is going to be going up and the other one not.
Right.
Yeah. So usually,
Yeah.
you know, SILJ overreacts to what the SIL is doing. Same with GDXJ, simply
Okay.
because, you know, some smaller miners there, a higher risk of default when things go bad, you know, so on and so forth. But, you know,
It's
people.
still probably better than trying to select individual silver companies.
Oh, absolutely.
Yeah,
absolutely.
yeah.
Because by default, that gets you diversification, right?
Yeah, right.
I mean,
Unless you're a specialist, yeah. But
unless you're a
I would
specialist
never
and you
do that.
fundamentally know,
Yeah.
you know, the specifics of each company, which, yes, if that's what you do for a living, then clearly you can just make a specific stock picking and overperform these indices. But on the other hand, the safety these indices provide, especially if we're talking about the junior miners, is that, for example, from the junior miners, on occasion, you're going to have some of them defaulting, right? But if you are in the broad index, you don't really care because the default of a single junior miner is not going to really substantially move the index, right?
How many companies do they have in there? Do you know?
I don't remember, but it's a decent
Thousands?
number.
Hundreds?
No, I don't think it's in the thousands, but it's still a decent number.
Okay.
So enough to be diversified and not have to worry about specifics of each individual company.
Okay.
Yep.
Okay, so I think we can talk about the rest, and we have quite a few things to talk about in exactly half an hour. Those of you that don't know, we have our special new season offer in ForexAnalytix. So you can, this is a great opportunity to be a part of ForexAnalytix, and this is also going to give you access to all our client webinars, right? And we have 3 of them every single day. And of course, to the rest of the services of our platform, analysis, patterns in play, chat room, so on and so forth. So Dale, have a wonderful weekend.
Great service.
Thank you, Steve. Thank you, Dale.
Thank you,
Great,
Stel.
great as always.
Steve. Yeah, we laid it out on the floor for you guys. So the way to say thank you is to become part of us. And hope everyone has a great weekend. And I want to thank the team for all the hard work they put in trying to help people out in a very difficult endeavor. This is not easy. And we just, feel committed to helping you guys avoid stepping on the landmines that we've all triggered at one time or another in our career. So, you know, helping you avoid bad trades is just as important as being in good trades, even though it doesn't show up on your P&L. If you took it, it would have showed up. So that's a wrap.
And also it's, you know, it's not the main reason. But I also need to stress out that the profession we're into is a very solitary profession, right?
Yeah.
So it also gives you the opportunity to be part of a bigger community, which in essence help you, you know, socialize when the markets are quiet, etc. And this definitely helps, you know, in many ways, more than one ways for sure.
That way you won't have to play that song, I'm lonely, I'm Mr. Lonely, I've got nobody to call on the phone. You know I'm a stranger. Anyway, you guys get it?
Yeah. All right,
okay,
guys.
this is the best way to wrap it up then. Have a wonderful weekend.
You guys too.
See you in half an hour for Forex Analytics,
all right,
people.
guys. Adios, everyone.
Bye-bye.
Bye-bye.
Bye-bye.